Thank you so much for joining us today. We are Agrisampo's ASNA Edge team. We have Sterling Smith with us today. He is our Director of Ag Research, and we have Mike Toohill, who is our Corporate Agronomist. We are sharing with you today our what's going on with the ag industry, what is going on with the trends, and I just want to tell you here real quick, our team provides critical information that complements traditional insurance and private products to add farm revenue and opportunities. This is a valuable tool for maintaining and growing relationships that help build agency business. We take market analysis, crop insurance that help provide a positive or a much more positive risk management opportunity for you. We are led by our Director of Producer Services, Brooks York. And then here's Sterling Smith, that handsome guy there wearing that blue hat there. And then we have Mike Toohill, who will talk to you all about running and everything to do with agronomy and weather in the United States. So Mike, I'm going to go ahead and I'm not sure who I'm passing the ball to.
Let Mike go first.
Mike?
Yeah, you want to pass me the ball?
Yeah, here, let me stop here.
Yeah, well,
Sorry about that.
that's fine.
If it will let me. Well, Sterling, can you pass it to him? It won't let me do it.
I'm not sharing. I already passed it back. I can't share.
Try something. Oh, here we go.
You got it? Okay.
There it went.
All right, I see the ball. I got the ball. I got the ball.
You got the
I
ball.
got the ball. Got PowerPoint going. Go back to share again. All righty. Let's see here. All right, let me get back to the front here, guys. Sorry about that. I don't know why I was in slide 16. Okay. We're ready to go here. Good morning, everybody. Again, Mike Toohill from sunny Bloomington, Illinois today. Like Sterling said, we were 49 on Tuesday, which was feeling pretty good. Finally got the ice melted off the sidewalks, and today it's 4 degrees. What we're going to look at today, I want to take a quick look at the final U.S. corn and soybean production yields per acre. I think there's some interesting stuff in those yields, and we're going to maybe talk a little bit how that relates to price here in the country. Probably the most important things I'm going to talk about today, what's going on with fertilizer and chemical price trends. A little bit of good news on the fertilizer side, but unfortunately, and hopefully it's better in your backyard, chemical pricing and supply availability is probably more concerning than fertility today. And wanted to look at the ever important U.S. weather. Lots of things going on in the weather map. I know it's only January 20th, but I think there's some things we really need to be watching out for the 22 crop. Before I show the final state corn yield, it's really important to me, I guess kind of amazing to me, how we grew a record corn crop in the U.S., 177 bushels an acre, considering how dry it was in mid-August. Looking at that map, pretty good shape for you folks in the South and the Central Belt, but Iowa, especially the northern 2/3 of Iowa, is very dry. In my backyard, northern Illinois, southern Wisconsin, pretty dry. And we still have that lingering drought in the Dakotas and also Minnesota. So looking at that map, you sure wouldn't think that that was a record yield per acre. But in looking at the final numbers, what this chart has, it compares November numbers to January numbers. There was no change. We were 177 in November. We were 177 in January. And kind of looking at state by state, the states in red, like Texas, Colorado, Minnesota, and here in my home state, Illinois, we went down. The states in white didn't really change much within a bushel or so either way. And the states in blue got bigger, and Iowa, Nebraska, Sterling's home state, Ohio, Wisconsin, and North Carolina. And probably the most important state on that map is looking at Iowa. Iowa jumped up to 205 in the middle of a drought this summer, which again continues to amaze me from an agronomy standpoint. We did have a lot of record yields in 2021. 2 of the I states, Iowa, Indiana, Nebraska, very good yields in the east too, from Ohio, Wisconsin, Kentucky, Pennsylvania, North Carolina. So looking at those states, we've already talked about that a little bit. Which I state is missing, and here in Illinois, we did not have a record yield despite all that rain. again continues to amaze me, but Iowa, through a drought through most of June, July, and into August, beat Illinois, which we were flooded the whole month of June, July, into September. So it seems like to me, we had a lot of water issues, a lot of wind problems in Illinois, and diseases such as tar spot anthracnose, southern leaf blight, southern rust, lots of things are going on. It did more damage to the crop than the dry weather did in Iowa. And one thing, looking ahead to the 22 crop, I know the crop went in very good conditions through Minnesota, Iowa, and the Dakotas. Dry soils in the spring means you get a very nice root system under your crops, means you can go out and get more water and more fertility. And I think that bought us some drought tolerance because of those dry conditions, and that's something to look forward to for 2022. And we also got more benefit from the late rains. I think it added and kept more yield than expected. I think things would have turned out differently, though, if we would have had more of that June heat, that would have lingered on through mid-July and August. So again, pretty amazing to me how Iowa beat Illinois despite we getting the rain and they had the dry weather. My last comment on the 2021 yields. Here in central Illinois, when you grow a very good crop like most growers grow, and we have a record U.S. crop, you wouldn't expect good prices. But again, kind of on Sterling and Brooks's toes here a little bit. But kind of what amazes me, Chinese corn exports have been very poor. COVID situation just doesn't want to go away. And a record yield, we've had very strong basis levels here in prices since harvest. And again, maybe it's changed here this morning. I didn't check the openings, but after the overnight markets, cash corn in my elevator, I checked for weather in central Illinois, and this is not close to any river system, not close to ethanol. We were still $5.97 this morning, so a very strong corn price considering a record yield. So just some thoughts here. Maybe I'm wrong. I think maybe the 2021, 2022, 2019 corn crops are possibly overstated to some degree. So maybe that's giving us some of our strength. Maybe Sterling will disagree, but again, looking here in central Illinois, most growers grew a top 5 corn crop. There's no corn on the ground anywhere. There's no bags in the field. So again, pretty amazing to me to grow that much corn on paper and to have those stronger prices. Now we're going to talk about soybeans here a little bit. We did have a slight increase in the U.S. soybean yield from November to January, went up just 0.2 of a bushel. The 51.4 is our second highest yield per acre, which is very impressive to me. And again, looking at some of those state categories, Minnesota down, Missouri down, the Dakotas down, Kansas down, Mississippi down, also Louisiana. The states in white stayed the same. And again, going back to the state of Iowa, they can grow a lot of beans with not a lot of June and July rains. They were up 3.3%. Indiana up significantly, also Nebraska, Arkansas. So again, looking at the bean yields, a very good bean crop considering how dry we were in the central and northern plains for June into July. Lots of record yields in 2021. Illinois is on this map. All 3 of the ice states set record yields in 2021, along with Nebraska, Ohio, Michigan, Kentucky, Pennsylvania, Virginia. And we're not going to talk about this topic a lot today, but I think one thing, the reason why our bean yields were so strong this year, despite those dry conditions, we had a lot of early planted soybeans this year. It seems like to me when you get the beans in early, it gives them an opportunity to maybe build a little bigger plant, catch a little more sunlight, and produce a little more yields. And we did have a very early planting season, and a lot of beans, especially in the ice states, in the Dakotas and Minnesota, were planted on the early side. So we were able to yield very well, not quite a record, despite far from ideal conditions as far as fill. And we also had some states that tied record yields per acre. We had Wisconsin, Tennessee, Mississippi, North Carolina. And my brother was hauling some beans when I was out on the farm on Tuesday. I wonder if he had an armored guard for those semis of beans going across the scales. Our local cash price this morning was $13.73. Again, very strong prices despite the second highest yield per acre U.S. soybean crop. And here in my home state, we had a record yields and $13.73 out the door. Pretty good price for soybeans, in my opinion. Well, I'm looking forward to see what Sterling has to say about our future price action. What about fertilizer pricing heading into spring? And maybe Sterling can help us out on this here a little bit. This is a Bloomberg price index. And kind of what I know about this, I think this has quite a bit of wholesale into the equation. And basically, the North American nutrient gauge has slumped for the second week in a row. Some pretty significant declines looking at that chart. And one thing I've been watching a little bit, I'm sure Sterling has been also, that urea price in New Orleans has been extremely volatile, but downtrending significantly in January. So again, kind of looking at the Bloomberg index, showing a pretty big reduction. But is this going on in the farm gate? And unfortunately, that's not the case here so far. What I have here is the Illinois cost production report. This is a retail level. This is based on January 13th. They update this twice a month. And despite all the changes on the wholesale side, ammonia only dropped $8 a ton in the last 2 weeks. Urea, despite those massive drops at New Orleans, is only down $16 a ton. Liquid nitrogen, which is the second biggest player here in Illinois behind ammonia, is only down $5. And unfortunately, on some of the dry fertilizer, which we were hoping were going to drop significantly for the guys who apply in the spring, DAP actually went up 71 cents a pound, potash up $4.53. Maybe things are a little bit better in your state, but that's pretty good data for Illinois, and it usually rings pretty true for the rest of the Midwest anyway. And a little bit off subject here, but farm diesel did rise a little bit here in the last couple weeks here in Illinois. So again, on the fertilizer side, we're seeing some very nice reductions wholesale, but we're not seeing those at the retail level yet. Kind of interesting to me, this is a slide I saw, or some information I picked up last week. Are these fertilizer prices increases due to market factors or the high price of corn? CF Industry, hopefully you guys have some stock in CF Industry. Their recent quarter-over-quarter earnings were up 662%, 305 compared to 40 cents. And I'm an old retailer. Back when I had hair, back in the 80s and early 90s, I know from past experience, whenever my bosses bought a fertilizer shed full of dry fertilizer, a tank full of 28, or a tank full of ammonia, when they bought that inventory high, they sure weren't going to pass that down to the farmers, at least not very significantly, very quickly. So I know from experience, if our retailers did purchase a lot of these inventories at high prices, I know it's going to take a while for that wholesale market to go down. As far as supply situations, I think for the most part, we're going to get our nitrogen this spring. It just may be very costly. So that's been some better news here. At least wholesale fertilizer prices have dropped. It's been slow to translate to the retail, and it may be kind of a tug and war, push or shove. Will farmer buy at the high prices, or will the retailer have to drop their prices to get the inventory moving out the door? So that'll be interesting to watch heading into spring. This one's been more concerning to me, looking at social media and some of my farmer contacts and kind of watching Twitter. It seems like herbicide, fungicide pricing and availability is a bigger concern than fertilizer recently. One thing I've been watching too, after the new year, a lot of farmers were reporting on social media that their prepaid herbicides and fungicide prices were not being honored. I don't know how to pronounce the word, but the force majeure in the contracts were being used as an example. Another big concern for me is the list of harder and tougher to get and more expensive herbicides is growing. We were talking about glyphosate and the Liberty being hard to get, but now we're having talk of something as simple as macetochlor, the old dual material. That's a base in many corn and soybean residuals, is getting very hard and more expensive by the day. We all know how well fungicides performed here, at least in Illinois, trying to get that tar spot and the southern rust knocked out. Also some fungicide problems as far as pricing and availability. And it seems like most of our inputs are getting more expensive by the day when it comes to our fertility. And another thing I heard this week is, as of last week, talking to a couple of experts in this area, it seemed like Chinese glyphosate imports to the U.S. are going to be down at least 4 million gallons this growing season. And one thing to consider too, if you're buying your herbicides through a retailer and it goes out their sprayers, it seems like about possession seems to be 9/10 of the law as it relates to having the product when you need it the growing season. Now, hopefully this herbicide situation is better in your backyard, and hopefully it's being overstated now, maybe overhyped up here. But again, we were really worried about getting the nitrogen. I think we will get our nitrogen this spring. It just may be expensive. But are we going to get the herbicides you want and the fungicides you want at the price you want this spring? I don't know if that's going to be the case. In fact, talking to a buddy the other day, he said his soybean herbicide bill doubled, and he bought those herbicides back in December. And again, hopefully his retailer has those herbicides in his shed. So again, possession seems to be 9/10 of law as it relates to having the product when you need it this growing season. How much of herbicide prices increased? Here's some other good examples. This is from a fertilizer dealer in Illinois. Last year, he said he could buy a semi-load of generic Liberty. That was very expensive, $114,000 last year. That same semi costs $350,000 today. A semi-load of glyphosate, 5-pound glyphosate, was $53,000 a year ago. Now it's $250,000 plus. So again, hopefully your herbicide fungicide situation is much better than I'm hearing and reading about. Hopefully I'm not concerning you, but I think our homework today, if you're a farmer or working, if you're an agent working with some of your customers, let's make sure we've got those herbicide, fungicides locked in. If we can, maybe take possession. So again, that could be a pretty big concern. It's going to be pretty hard to grow a record crop. One, if we're going to be cutting our nitrogen rates due to price, and two, if we don't get the herbicides and fungicides we need to protect these crops. Now we're going to talk a little bit about weather here this morning. Last year, we sure talked about the northern plains. And I guess looking at the northern plains, maybe something I've learned, I don't get up in the Dakotas, a lot of Minnesota, but for the most part, maybe some pretty good soils there. Maybe not as hot in the Dakotas and the northern plains versus the southern plains. So last year we were watching the northern plains, and if you look at that map, there's still plenty of dry weather in the Dakotas. Most of the eastern parts of the Dakotas, where the most productive soils are, in a little better shape, but still some pretty dry soils in parts of Minnesota and Iowa. But last year at this time, the southern plains were in very good shape. Now, we did not have any drought down in Texas, Oklahoma, Louisiana, Mississippi, Arkansas. So again, I think right now the focus has kind of shifted from the northern plains to the southern plains. And why that is important, because of right now that winter wheat crop is growing. We all know the winter wheat is tough. It has 8, 9, 10 lives. But between the dry weather, the lack of moisture to get the stand established, and all those big, strong hurricane force winds, from the pictures I've seen, a lot of that wheat's in pretty rough shape. And what do I know about being an agronomist, living in Illinois, maybe even Sterling over there in Omaha, Christie down at Jacksonville? What's important for us in the springtime as far as getting moisture up to Illinois? I like to have a wide open, wet soils working my way down the Delta and up the Mississippi River. Remember back in 2012, again, don't want to alarm anybody here today, doing enough of that today. In 2012, we had a similar map where it was very dry in Louisiana, Mississippi, Arkansas, and that was limiting our moisture flow as the moisture stream in the systems came up the Mississippi River into the central and eastern Corn Belt. So that's something to be concerned about. And also a concern, too, is the drought in northern Illinois never really went away last year. We grew a pretty good crop there, not a record breaker. And that drought also expanded to our house in Putnam County this day. So again, as a trader, as a farmer, we all know these crops are good. We've got great genetics. We've got good rooting systems. But that's a pretty concerning map to me. I wonder if there's enough risk premium based on dry weather for the corn and soybean crops. And I really wonder about our wheat price. Unless things change here over the next 30 days, 45 days, I think the winter wheat crop in the southern plains could be like the spring wheat crop in the northern plains last year. Yeah, we all talked about how that Dakota spring wheat crop was going to be fine until one day it wasn't. I was seeing pictures of pop can top high wheat that wasn't yielding very well. We did have some change last week in the Drought Monitor. This is a pretty important map. Again, I know it's only January 20th, but look at the drought expansion down in Louisiana, Mississippi, Arkansas, parts of Texas, Oklahoma. And again, I talked about it originally. There's a little bit of dry weather expansion in some of the best soils in the world in my backyard up in Putnam County, looks like LaSalle, and also Bureau counties. Outside of the Gulf, southeast and northeast, the next 7 days looks very quiet. Moisture-wise, there is no wheat helping rain in that map. There is no soil building rain in that map. So again, dry weather continues for the next 7 days. And I also want to talk about soil building. This will be a positive for us. Very warm in December for most of the U.S. Not good for our crops. It doesn't kill insects. It does not do a good job of freeze thaw. But we've had very good soil building conditions heading into January. Looking at that map of the central and northern belts, all of those greens are significantly below average temperatures. And what I love about these temperatures, especially here in central southern Illinois, where we don't have any snowpack, freeze thaw, freeze thaw, freeze thaw builds very good soils. That's great for soil conditions, and that's also good for spring rooting, which could help us maybe counteract some of our lack of moisture. So again, that's a pretty good map to me. I think that's going to expand a little bit. Like Sterling said earlier, it was close to 60 degrees in Omaha on Tuesday. The next 4 or 5 days is going to make that map even greener as we head closer to the end of the month. And again, where's that snow kind of limiting our frost depth? Snow cover is pretty well limited right now to North Dakota, Minnesota, and parts of Iowa and Wisconsin. So right now we've got some pretty good cold air running through most of the central and eastern belt. Not a lot of snow. So again, that's very good for our crop conditions for next year for building good soils, killing some bugs, and getting that frost down deep. And as I wrap up here today, getting ready to turn it back over to Christy and Sterling, those cold temperatures continue for most of the central and eastern belts. So again, that's not a bad map. I know from a human being standpoint, it's always nice to see those nice warm colors in late January, early February. But if we're going to have some cold temperatures, at least the days are getting long now. There's more sunshine. So again, that's not a bad map. That's good for our soils, good for our cropping prospects. So at that point, Christy, if there's any questions for me, I'll turn it back to you, and also looking forward to hear what Sterling has to say about our markets.
All right, Sterling, I pass the ball to you. I'm not seeing any questions right now, but if you do have any questions, please go ahead and throw those into that chat box or into the Q&A. We'll be happy to answer those for you. Thank you, Mike. That was great.
Thanks, Christy. Appreciate it.
All right, let's see here. Are we sharing my screen? Can we see a kind of reddish map of Brazil here?
Not seeing it yet.
Not seeing it yet, Sterling.
Okay, let's.
Oh, there we go. Starting to share content. Yeah.
There we go.
You got the ball, buddy. So.
All right. Well, thank you, Mike, and thank you, everybody, for having us on today. I really appreciate it. And Mike brought up some really good points. We have good crops. We have, going with that, prices that are being supported. And this doesn't really seem normal, and there may be something that seems contradictory here. And I'm going to explain to you why these grain prices are staying up and what's the risk that can send them lower. The first thing that's supporting us, this is a forecast for January 20th through February 28th in Brazil and most of South America. As you can see right here is the key growing area. This is Mato Grosso in Brazil, and we can see that there's some dryness in the forecast. We move down into Argentina here, and we see the same thing. We have seen some problems with South American precipitation, and this is going to cut down the size of their crop. It's not going to be anything like last year. Now, last year they produced 87.5 million tons of corn in Brazil. I think this year we're probably going to be looking somewhere around 115 million tons. So that brings 22 million tons of corn back into the system, and that is one of the reasons why we're not seeing China coming in here and buying corn from us. When they started buying corn, they actually started buying it really in December and January of last year, and they've been noticeably absent. And as long as they have confidence that they're going to be able to get their corn out of South America, they are not going to be that willing of buyers here. So this is one thing that's supporting us, is that we do have a little bit of pressure on the weather. And if we look here again, the more near-term forecast shows again that dryness in Mato Grosso. Don't be too alarmed that that's going to create a big situation there. Right now they're starting to harvest, and things have been very wet in Mato Grosso and the main producing areas in Brazil. So this dryness is actually going to be welcome for doing farm work. The big drought area was down here in the south of Brazil, and we are going to see some yield reductions because of that. And that will at least help keep the tone of the market a little bit bullish and a little bit more favorable. But there's something else going on. And if you're not subscribing to our newsletters, please do subscribe to them. We put something out every day, and a lot of what you're going to see is a continuation of what I'm talking about today, but it's all in real time and everything's updated. But every Friday afternoon, I put out a thing called the Friday Afternoon Marketing Club. And what that does, I take a look at what is going on with what the funds are doing and how the market is actually getting positioned. And what I talk about here, and I'm going to point to it, usually I talk about this, the non-commercial position. What this is, these are speculative funds that come in, and they are actively managed funds that come in and trade every day. And they are the single biggest driver of price action, day over day, week over week, and to a certain extent, month over month. The other items that come on this report, though, there's another one, there's the commercials. These are the people who have to be in the market. This is, think about, Kellogg's, for example. They need to come in and buy corn, and we can see what they're doing. This is also, when you sell your grain at the elevator, that elevator immediately sells a futures position against it to hedge it up because they don't want to take on that risk. So that's what this looks at. Now there's another category that used to get a lot of attention back when we had the big commodity boom, and it's kind of not been that big of a deal. But with all these talk about inflation and everything going on, we're starting to see some money flows into what we call index funds. Now, these are not unlike a stock market index fund. When someone comes in here and buys this, and when I'm talking about someone, I'm talking about a big investor. I'm not talking about generally an individual, although individuals can buy these. I'm talking about places like CalPERS, the California Pension Fund, people like BlackRock. Major players come in. When they want to get commodity exposure, they come in and they buy an index fund, which buys a broad spectrum of commodities. It buys energies. It buys agricultural items. They buy precious metals with it. And we've seen a very good inflow here. I'm going to put up a chart right now of what's going on with these index traders in the corn market. We'll start with this. And as we can see here, I'm going to take this back over time a little bit here so we get a better idea about what's going on. And here, actually, we'll take this back a long way in time here. So, if you remember back to 2009, we had the big commodity boom. And these index funds, the chart only goes back this far because these were a fairly new invention. This was something that really didn't exist until the mid-2000s. And as you can see, investor money flowed in, and this pushed corn prices up noticeably in 2010. Notice they weren't such big buyers when we had record corn prices in 2012 as part of the drought. And as things normalized and stabilized, and we didn't really have a lot of inflation concerns and economic worries were not out there, we can see that the investor position shrank noticeably. Now what this is a net position. This is, we take all the longs, we take all the shorts, and we get an idea about where they are. But what we want to look at here is really what's going on right now. And as you can see, we had a little bit of a dip coming in, but as this inflation talk has gone on, funds, the big investors want a way to maybe try and hedge themselves off and try and get a little coverage in the event of inflation. And as we can see here, since September, these funds have been in here and they've been buying and buying noticeably. This creates more of a floor. This isn't going to necessarily drive prices up on a day-to-day basis, but it will help keep a floor in place. And this buying that we've seen, particularly based on the strength in oil, these funds are very dependent. You know, they get agriculture kind of as a bonus, but they're usually looking for energy exposure, and this is their way of doing it and diversifying it. They've been buying since crude oil has been taking off, and if they continue to buy, this is something that will help provide some general support for the market. Now, the other types of funds that I talk about are these day-to-day traders, these non-commercial funds, and these are the people that create a lot more specific market risk. We're going to take a picture of what they look like right now, year over year. And I put this out on Tuesdays, and I cover it again on Fridays with whatever the daily activity is. And if we take a look where we are right now, we can see we have a very long corn position. It's the second longest we've had for this time of year, but these funds, these actively managed funds, have been sellers in here. And this is where we have near-term risk. So we kind of have a tug of war going on. We have somebody who, I want to be exposed to commodities for 2 years broadly, buys an index fund. Somebody here sitting, in Chicago or New York or Connecticut, I'm trying to make money beating the corn market day to day, week to week, month to month. They've actually been a little bit of sellers in here. This creates an overhang for the market. Right now we have 240,000 contracts long. And if you do the math on that and you multiply that by 5,000, we're pretty close to having funds long the entire corn carryout. So if the markets get nervous for some reason, these guys are very quick to hit the button. Index funds are not that active. They don't trade, but if these guys want to get out, they can get out in a hurry, and they will sell a large number of contracts. And as you can see, over the last week, they sold 28,000 futures contracts, which for the corn market is a fairly good chunk, and it can have some immediate effect on prices. Now, looking at corn here, I'm going to take a look at the chart of corn, and we've done better. We were fighting with the $6 level, and we had been hovering around it really since October, and we've managed to punch above it. So the question that I'm asking myself, the question the guy at that fund at Citadel in Chicago is asking himself, is $6 going to become support, or is it going to become a magnet for prices? As you can see, we get up close to it, we get pulling back, and that number seems to be an area where we're finding some market equilibrium right now. What would change this is either, one, some fundamental changes in the corn situation, meaning we see more production out of South America, which obviously would be bearish. If we see less production coming out of South America, we would have something that would be bullish. So the market right now is at a level of equilibrium, and typically when we find this, we don't stay there very long. And this is right now where we are with the corn market. The picture for the soybeans, and we're going to go ahead and switch over and talk about soybeans right now, is a little bit different. Take a look at the report here first, and switch this over to corn here. Switch this to beans. And when we take a look at soybeans, look at these index traders. As you can see, they've been in here buying, and they bought almost 12,000 contracts of soybeans in the last week, which is almost twice as much as they bought for corn, which is very interesting, as they have to maintain a balanced profile. So when we put up a chart of this, we see what they've been doing in the soybeans. Again, it looks very much like the corn, but again, we're seeing buyers from a place where we did not anticipate buying. And this is something that is, again, going to be rather supportive. Now, when we go back to the picture of the soybeans, I'm going to go ahead and bring up what the regular funds are doing here. Let's bring this up. And as you can see, make this a year-over-year chart. And what we can see from this is current position for the soybeans is right here. And if we look back, they've actually been very good buyers of soybeans. Funds have been aggressively buying soybeans. They sold a little bit last week, but 500 contracts isn't, anything to be too worried about. But in general, they've been buying this. Now, what has got the soybean market so cranked up here? Why is basis so good? Why are we seeing that? Well, here is your culprit. And while we're seeing a little volatility and things, the markets have gyrated a little bit, we've seen higher prices in soybeans. Actually, here, let's get a little clearer picture here. We're going to do the second month here. These are soybean crush margins. Historically, if you're trading above 75, 80 cents, you're feeling real good about things. Soybean crush margins, even after a little bit of a slump here, are quite elevated. Processors need soybeans. They're making a lot of money processing soybeans. And if we look at the NOPA crush numbers that came out last week, we're seeing record soybean meal production, record oil production, because it's making sense to process the beans, even with beans climbing, which kind of gave things a little bit of a black eye here because the meal and oil didn't keep up just yet. We're seeing this going on, so we may very well see some balance sheet tightening in the spring, which is very unusual for soybeans. And where that's coming from is the domestic crush numbers. Why this is happening, we need to go back and think about South American weather and what's going on in Argentina. The situation in Argentina is very, very dry. The conditions there are a real problem. Argentina is a major exporter of soybean meal. And when they have crop problems, the world needs to find more soybean meal. And we have seen a decided uptick in U.S. exports for soybean meal. We've also seen very good domestic demand. So with that being said, our local consumption of soybeans has increased. That tied to the situation with the index funds being a little bit more concerned about inflation and seeing some investor inflows is what's created the situation that we're seeing with the soybeans here. And I'll bring up a chart of March beans here, and we'll take a look and see just what's going on there. And as you can see, March beans, $14. There we go. Now, if you told me we were going to be looking at a 350 million carryout for the U.S. and you're going to tell me we have $14 soybeans, I'm going to assume that there's a pretty serious problem going on because those two numbers don't correlate. Usually if we see a carry out, pushing 350, we should see nearby beans probably trading closer to 12.5. And right now, we actually have some very nice, very bullish behavior here in the soybeans. The 3-day pattern right here, down, make a bottom, take off, and climb higher. That's actually a very bullish pattern for soybeans. And the strong U.S. crush and exports for soybeans, which, while we're not going to set a record, they're strong. They're good enough right now. If we see that change, we see more soybeans coming out of Brazil going into China, that could be a problem. By the same token, if we have a little bit of trouble moving those beans, we have logistical problems from COVID, logistical problems from a strike, anything like that, we do have right now for nearby beans a very supportive situation. Not ragingly bullish, but right now, as long as we don't have another kind of problem, soybean prices are going to be fairly well supported. Now, how is this translating into new crop, which is really, if you've got old crop soybeans in your bin, good on you. That is, you have, again, maybe you need to hire an armed guard to protect those soybeans because you've done quite well. New crop beans are back above $13 a bushel, and a lot of the strength is what's coming from the nearby futures, and that's dragging the rest of the complex higher. So we need to be very attuned this spring to what's going on both in the old crop and the new crop beans, because we have very good prices, and we're suddenly going to become much more dependent on U.S. weather. We have good hog prices, we have good cattle prices, we have good demand right now, so that is going to keep the feed prices well supported. Now, how long that continues is going to be a function of the U.S. consumer to a great deal. I'm noticing that cutout values, for example, for choice and select cattle have been raging higher of late, and that's going to move the whole cattle price situation higher, and that will be good for grain prices. If we see that change, we may be looking at, a noticeably different situation with the soybeans. So the risk, yes?
Oh, question. Who mostly buys the Argentina soybean meal? Is that China?
That goes mostly to Europe.
Okay.
Mostly to Europe. And every Thursday or every weekday when we have an export sales report, that'll actually be out tomorrow, I track the soybean meal. And a couple of things that I've been very impressed with, and this is fallout from what we saw with the trade war. When China came in and said they weren't going to buy U.S. beans when the trade war started, they meant it. They did not buy U.S. soybeans. They stopped. Well, we managed to find places to put these beans. We made new friends, particularly in places like the Netherlands, in Germany. They have been buying soybeans from us. They have also been doing a very good job of buying that soybean meal. They're locking it in. The soybean meal from the U.S. has a little higher protein. It has better digestive qualities. So we managed to get ourselves some new customers here, which is actually beneficial. We do not, any business that you have, you never want to be solely dependent on your biggest customer. You want a diversified base of customers, and that's something that is helping out the soybeans here as well. So with that being said, if we see the continued problems more over in Argentina and they can't move as much meal, if we see logistical problems in Brazil, who is also a major soybean meal exporter, that's going to be something that's going to be beneficial to the U.S. and should be able to keep soybean prices fairly well supported. Now, we're going to talk about wheat a little bit here. And the situation with the wheat has changed noticeably. And the first thing, let's look at a chart here. Minneapolis wheat was, without question, the item that led us higher. Search for high quality wheat is something that really drives the price for the other two wheats. And as you can see, Minneapolis wheat had done very, very well. We held $10 very nicely. And then, well, we had a problem. I'm going to show you here in just a second where that problem came from. But now we're starting to see some support come back into the market. If it continues, that's a good thing, but this may just be a little bit of a bounce. So where we go here, I'm of two minds. We may see prices slink back. We have serious drought issues, as Mike pointed out, down in Texas and Oklahoma, and that's going to definitely create a problem for the wheat market? Maybe. If we get rains in the spring and that drought corrects itself, there's going to be plenty of wheat, and we're going to be looking at a different situation. If it continues to stay dry, we're going to be looking at a problem. But just to show you the power that these funds can have in a market, soybean prices before they, or excuse me, Minneapolis wheat prices before they kind of fell apart here, we were sitting as high as 1035, and we dropped back down to about 876. When we look at the Minneapolis wheat fund position, and index funds are not necessarily big buyers of this simply because the market it's fairly small and it can't take that much space and get all sorts of associated problems. But when we look at the managed position, which these are the active managed funds for Minneapolis wheat, put it up on a line chart here, you can see this corresponds right to our high prices that we had, in November. As you can see, the funds were long, at their peak, they were long 17,000 contracts. Now they're only long 5,700. They sold 12,000 contracts, eliminated 2/3 of their position. That's what took prices lower. What will help prices come back is funds are very news-driven. They're partially technically driven, but they need a story. When that guy goes in and he wants to buy Minneapolis wheat, the trader has to go talk to that portfolio manager, and he has to convince him that prices are going to go up. What will help Minneapolis wheat out and will help the wheat complex is if that drought hangs on in Texas and Oklahoma, there will be the nervousness. The funds will re-engage, and that will push prices back up. If we do not see that happen, we're going to have a situation where they may even continue to liquidate if that drought reverses. So that is right where the risk sits with the wheat right now. When index funds come in and buy, they tend to buy Chicago and Kansas City. And if we see that really pick up steam and we get bigger inflation numbers, Minneapolis may not be the leader anymore. We may be looking at Chicago. So that will be an interesting thing to watch from a trading point of view. Now, we're going to talk about things that make me really unpopular. We're going to talk about inflation. We're going to talk about energy prices.
Hey, Sterling.
Yes.
Sterling, before you go to that, we had another question about the weather and corn. So before you go too far, this one came in. It said, with the weather as of now not causing a deep frost, how does that affect especially corn on corn ground with the rootworm problem we saw last year going into this year? Then more of a concern with hearing could be shortage of fungicide. I guess that might be for you.
That's a good question for Mike.
Okay.
And then I'm going to follow in with some comments about U.S. weather as well. So.
Okay, thank you.
I guess first, Christy, the question about the rootworms. It would be nice to have a deeper freeze, but my experience is those rootworms are very winter hardy, even frost depth 15, 18 inches. So again, I don't think it's been cold and deep enough, long enough where most of the rootworm problems are to have winter have much of effect. And rarely, it's got to get really, really cold in the wintertime to kill the rootworms. The best way to kill rootworms, in my experience, is have some wet Junes, flooding rains. And I would expect, based on the dry situation in Iowa, Northern Illinois, Minnesota last year, they do have snow cover in most of those areas. So I think the rootworms are going to have very good survivability heading into next year. So it looks like to me, if I was a corn on corn guy, would really be concerned about rootworms. I know it's been cold, but we've had snow cover, and it takes a lot of cold and very deep to kill a significant amount of rootworm eggs. And as far as your question on the fungicides, one thing we're seeing with the high price of corn, $6 corn, whether you're corn on corn or corn after soybean ground, fungicides had nice response. You've got a lot of diseases in these fields, especially adding tar spot into much of the Midwest. I think locking in my fungicides would probably be as high a priority as locking in my herbicides. And one concern we had last year with the wet conditions here in Illinois, we couldn't get the ground rigs out. The airplanes are running 1 to 2 weeks behind. So again, I'd want to be locking in my fungicide price, and also my fungicide applicator. So again, I think we're going to have some disease issues if we have any type of normal moisture, and that would be a high priority of mine. Hopefully that answers the question.
And moving back towards U.S. weather, the weather guys that I talk to, we look at a thing called analog years. And weather now, when we look at where we are now, is beginning to shape up and is starting to look a lot like last year. And last year's weather, at least here in Nebraska, was a lot like my fantasy football team. I made the playoffs by 1 point, the bare minimum.
Yeah.
I won my first playoff game by 3 points, the bare minimum. I won the second playoff game by 1 point. And yes, I did win the Super Bowl by 3 points. I got exactly what I needed when I needed, and it was, I'd like to say it was a lot of skill, but some of it was dumb luck. The weather here was just like that. We got what we needed when we needed, but there was no nice big soaking rains. There wasn't a lot of excess or anything to play with. We were lucky. Had things been just a little bit different, those record soybean yields and those record corn yields probably wouldn't have happened. And if we get another year where weather is like it was in 21 and 22, the market may be a little bit more dicey, because in general, things out here have been pretty dry, and we're seeing that dryness in Iowa. So far in Omaha, we've only had 6 inches of snow. And that snow, it was so light and fluffy, I didn't have to fire up the snow blower for much of it. I could take my leaf blower and blow that snow away. It was so light. So the moisture situation here is a little bit unnerving, but again, we're a long ways away from that.
Yeah,
Now,
just one comment on that. Sterling made some great analogies. He was right about the 2021 crop. One thing we didn't have was a lot of heat in late July, August. That would have changed the ball game significantly also. Good points, Sterling.
Yeah, exactly. If we have, just the bare minimums that we get for the rain, and we're lucky to get it, and then all of a sudden, they turn up the furnace in July and August, that's going to have a material effect on yields. Now, talking about input prices, this is a chart of natural gas, and as you can see, we had our big peak. Prices for fertilizer and the inputs are going to be a little bit behind them. They're going to be a little bit slower. And as we see, natural gas prices have come down, and we're starting to see some relief on the wholesale level. Now, we had quite a little scare here last week, and prices rallied 14% for natural gas in one day, which is, if that were soybeans, 14% of soybeans would be like soybeans going up $2 in a day. So this market is very volatile, and we were kind of at a turning point, but prices reversed the next day, and now prices have kind of fallen back a little bit. So if we can continue to see natural gas prices stay under pressure, that is something that will eventually help input costs in the most broad sense. That doesn't mean specifically that you're going to get any help, or if you're having trouble getting it, or if there's a supply issue in your area. It's not going to help that. But generally, the tide appears to have turned, at least for the time being, on input costs, at least from the chemical side. And now here's the chart. And I'm glad we're doing this remotely, because otherwise people are going to throw tomatoes at me and things get all rough. But this is a chart of crude oil. And as you can see, well, we tapped the strategic reserve as markets were starting to break down, and it knocked crude oil prices back. Well, for a little bit. And as you can see, we're now back up and making yet another high. This is the highest crude oil has ever been in 7 years. This market appears to be quite unhinged. It's well supportive even on a day when it starts the day lower. We managed to stage a pretty good recovery, and this is a very bullish sort of behavior. And we may see some breaks in crude oil prices, but seeing this number that's 87.19 a barrel right now, seeing that in 3 digits come April, don't be surprised. I mean, it would be great if it does go down, but if we see, I'm expecting to see triple digits. So, what you can do with your diesel and things, you don't necessarily have to lock in all of it, but you might want to lock in a little bit of it. I know it stinks and prices are high, but higher prices usually beget higher prices. Now, what this spells for everything else, inflation comes in lots of ways, but when crude oil prices go up and stay up, that pushes inflation all the way through the supply chain. Think about a loaf of bread. There's the wheat and everything that goes into that. But from that wheat, you have to get it to a grocery store shelf. When energy prices go up, this pushes everything and pushes inflation through the supply chain, which is very sensitive right now. And people are not shying away anymore from raising consumer prices. They're having labor issues. I mean, every place here in Omaha is hiring, and wages are rising. And this is something, wages can be sticky. We could see prices relent in the commodity market. That doesn't mean inflation is going to relent. And what this also means, that next batch of inflation numbers we get, the last ones weren't too bad, but they had oil prices right here. The next batch is going to be dealing with oil prices up here or maybe higher. And what that's going to do, that's going to affect our little friend interest rates here. And this is a chart of 10-year interest rates. And we made a very nice little low right here on December 20th. So that was exactly a month ago. And the low for the 10-year interest rate was at 1.35%. As you can see right now, we're at 1.83%. So the natural market has already priced in 2 rate hikes. And this, while we did get ahead of ourselves and traded as high as 190 here a couple of days ago, and things are backing off simply because the market has become overbought, there's a pretty good chance that when we're having this conversation in a month or two, we're going to be more like 185 to 2. And when these things accelerate up this much, this creates a lot of macro market volatility. We've been watching the stock market here, and we're going to go ahead and throw that up here. Today, we're having a good day so far. But if we look at things from a bigger perspective, this is when interest rates were at their low right here. The markets were at their highs. They began to pick up. This market began to develop problems. And if rates suddenly spike sharply again, we could see this market start to have some trouble, because as we see lower prices, we're beginning to have a bit of a breakdown here. And today we're having a bounce because we got basically cream 2 days in a row. One warning about any markets. Bull markets typically start days weekly. They're weak, prices are lower. They build strength through the day. Bear markets start the day out strong and very often finish weaker. And yesterday was a perfect example of that. Market opened higher, traded higher, and we ended up throwing all the gains back and reversing. And the leader of this, and the thing that's the most sensitive to the interest rates, are the NASDAQ, the tech stocks. So I'm talking Amazon, Microsoft, all of that. And as you can see, we're doing better today, but this market has had a serious problem, and we're now trading below the 200-day moving average. The scariest thing for an equity market is it gets below the 200-day moving average. It tries to bounce and tries to cross that moving average. If it can't cross that moving average, the owners of these shares are going to get very nervous, and markets can have serious problems. So we're probably going through a period of repricing here. And why this matters, if interest rates go up and we see market volatility, that can often end up landing on the desk of those funds I was talking about right now that are tremendously long corn, very long soybeans, and very long cotton. They could be in a situation where they're forced to liquidate, and that can create a problem for everybody. And that is, go ahead.
Oh, no, go, please finish your thought.
No, go ahead.
Okay, there was another question. Says, do you think input cost is going to change corn acres, considering how much of the corn we produce that we use? I might not have heard the question right.
Well, I'm going to answer, and then Mike and I can have a little debate about this. If we have high input costs, the first thing I would look at is marginal acres. We could see some of those get cut back. Or they could find marginal corn acres could suddenly become soybean acres. That would be simple economics, and that makes sense. My other issue is if we have problems getting it, prices are high, maybe we don't fertilize as much, then we're leaving that crop that, I mean, this stuff is tough. It's hard to kill. But if we don't have, as much fertilizer maybe as we normally would, that is going to create more weather risk, meaning we don't get the weather that we need when we get it. We might not see record yields, and that's something that I could see creating some bullishness. And Mike can give us his thoughts on that.
I tell you what, Sterling, you held it 100%. I think what we're probably going to see if the nitrogen prices stay high, more marginal acres or go soybeans, southern Illinois, maybe Missouri. Probably going to see more of that in the southern plains. And I also agree it's going to be hard to grow a record crop when your Roundup costs 3 to 4 times % higher. Your Liberty's more expensive for the soybeans. Hard to get fungicides. Your simple products like Dual are expensive. It's just going to be hard to throw the kitchen sink at this crop. One, it's going to be hard to get the will to write the check, and two, it's going to be hard to find the product. So I would agree with you. Probably going to see more soybean acres for simplicity, especially in the marginal acres. And I know we like to chase corn yields, but it's hard to do based on price and based on our supply of inputs. So hopefully that'll ease up heading into spring. But I think you hit that one perfect, Sterling. Thank you.
Oh, well, thank you. I appreciate that. So again, I'd like to remind everybody, if you're not getting our daily stuff, please do, because it basically, my story is always the same. I don't adjust it for anybody. This is the story in the world according to me, and you'll get daily updates so you can stay right on top of things.
Hey, there is one more, and you may have already covered it, but I do want to go ahead and ask it just in case we didn't. Do we see wheat get planted in the Dakotas this spring over beans, especially with these prices, and will it depend on the weather going into planting?
That's going to be a really interesting bit of competition, and I'll let Mike weigh in on this too. We could be in a situation where actually in the Dakotas, if you're debating between wheat and soybeans, you could have a pretty good situation. We could see fairly firm soybean prices, and if the problems continue in Texas, we could see wheat prices go up as well, or at least maintain higher levels. What this means is where, it could end up hurting corn acres, in my opinion, meaning, well, I've got corn, you can't really, where you've planted corn, planting wheat isn't really a good idea. But you can see acres that maybe were going to be corn, we're going to get turned into soybeans, acres that were going to be soybeans get turned into wheat. What do you think, Mike?
I think you hit that exactly too, Sterling. I think less corn up in the Dakotas, and what a great problem to have. Nice wheat price and nice soybean price. So less corn, more soybeans and wheat. How it plays out with soybeans versus wheat, I don't know, but great situation for the guys in the Dakotas and ladies.
Right, and that will be exacerbated by these high input costs. It'll make the decision very easy to make, I think.
And I know, Sterling, you always tell me there's no really silly questions, but weren't we talking last month that there's a new soybean plant going up somewhere in the upper Midwest last month?
Yes, there is. There is a new processing plant going in. It's somewhere, I think it's not too far from the North Dakota-Minnesota border. And yes, that is going in. And that something, again, how do you improve basis? You increase competition for the product. And there's nothing better than a soybean processing plant to increase competition for that. And that's something for certainly people in, say, within 50 miles of that plant. It's going to be very beneficial.
Those are all the questions I am seeing right now. But please go share those. I will get them asked as soon as I possibly can. These guys have had some really great information. Please go ahead and continue, guys.
Actually, I have covered pretty much everything I think that we need to talk about. One question that did come up when I was in Morris, Minnesota, was concerns about global factors, including, for example, if there's a problem with Putin. So if Mr. Putin decides he wants to invade the Ukraine, I don't think he's going to. The information that I get on it, this is going to be a lot of posturing and a lot of back and forth, but I don't think he really wants to get into a shooting war. If he's going to do that, he has a window from about now through February, simply because the conditions there in the Ukraine, it gets very muddy. It's very hard to move all that heavy equipment, as other invaders have found out in the past. But there is the risk of, you line up all these troops and you put them there, it's not a perfect world. Something stupid happens and we get into a shooting war in the Ukraine. The EU and the United States will put hard economic sanctions on them. It may become a little bit harder to move Russian wheat. That would be beneficial to the U.S. futures market and the futures market in Paris. So that is something that could potentially push wheat prices higher. The other question that came up was if China does something. Well, if China, for example, God forbid they invaded Taiwan, that would have some very serious global impacts. One, for inflation. A lot of our semiconductors come from there. That will create a whole new set of supply chain problems. And we will be looking, probably at some pretty strong sanctions from the West on this. And that will leave South America being typically the only supplier really for soybeans, at least directly into China. And that's something that could create some additional volatility, but I think we may be better prepared to handle that since we have managed to recover from the trade war. So that is everything that I have. Do we have any more questions, Christy?
No, actually, I do want to remind you all that you can sign up to receive our daily and weekly communications via email by sending an email to us at marketinginfo@sompointernational.com. And I've put that link in our chat box a couple different times. And do want to let you know that today's session has been recorded, and that will be available on our YouTube channel. And that is AgriSompo, North America. And that is a YouTube channel that we have. And we will have that in our communications, in our email communications that come out, our daily market outlook. And it will be in hopefully today's, but it will probably be in tomorrow's, but we will try to get that in today's. You're welcome to share that. Definitely try that YouTube channel because it should be out there today if it doesn't make the email today, but we will get that out there as soon as possible to you. But if you have any questions, please shoot those to us at that email, marketinginfo@sompointernational.com, and we will get those answered as soon as possible. We'll get that information out. Mike, Sterling, Brooks, we'll get the answer to you as soon as we possibly can. We get a lot of questions after these meetings, and we do try to get those questions answered as soon as we can. And we do try to answer those personally. So definitely get those questions asked. Thank you so much for joining us today. This has been such a great meeting, and we truly appreciate your questions and letting us know where you're calling from or listening in from, and knowing that some of you are in a heat wave area where some of us are just out here freezing like popsicles. But thank you again so much for being a part of our call and tuning in. Thank you again. We will have meetings. We do these every month. Our next meeting will be a WASDE, so be watching for information on that, how to tune in and get on and be a part of these calls. So anyway, any last parting words, Mike and Sterling, before we press the stop button here?
No, but I'd like to say grain prices have turned around and we're moving higher along with crude oil.
Yay! Moving higher.
Moving higher, not much, but a little bit.
Along with the crude oil, that I guess.
Yeah, I mean, here, if you really want to see things ugly, this is one we're all, and again, you can't throw tomatoes at me. I'm safe, locked up in my house. But this is the price of gasoline, and we're $2.47 a gallon. And if crude oil prices went up another $20 a barrel, it's not going to be much fun at the pumps. But that will be good for ethanol crush margins.
Well, oh, there is that.
So there is that.
There is that.
Well, thank you again so much for joining us. Have a wonderful day, and we will talk to you all soon. Take care.